The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 19th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better Money Master and to provide you with tools that empower human potential, because living up to our potential is something we must master each and every day. So let's begin with an empowering belief or two. The first one brought to us by Albert Lowell, and it goes like this. There is only one thing that will really train the human mind, and that is the voluntary use of the mind by the man himself. You may aid him, you may guide him, you may suggest to him, and above all else, you may inspire him. But the only thing worth having is that which he gets by his own exertions, and what he gets is in direct proportion to what it is that he puts into it. How true are those words, folks? They're true for me in my life. Maybe they're true for you as well. That's why I like to put a lot of energy into everything that I do out there. Don't leave anything on the table. No reason to. The second thought, this is brought to us by Dick Stupfin. Goes like this. Minds are like parachutes. They only function when they are open. Open your mind up, folks. That's all you need to do. Right now, let's go check out these markets here. We got the Dow trading off 20 points right now. S&P down 2. NASDAQ is, the composite is down about 80 cents, almost flat. Russell 2000 off 2.5. NASDAQ 100 completely flat. New York Stock Exchange, that is the leader in the clubhouse to the downside. That's off 0.2%, off 20 points. 823 net decline in issues. That's really what we want to be paying attention to. Our call-in number is 877-927-6648. Give us a call. We can most certainly take a look at whatever it is that you are trading, currency, equity, futures, whatever it might be. Happy to do that. We'll peek in here at the ES Mini 30-minute. Maybe you didn't catch the early show, the 9 o'clock show. We're really taking a look at the consolidation pattern on the 30-minute chart, our EKG system for the ES Mini. That consolidation pattern running to about the lows, right around 1642-ish, up to that's on the low side. The high side is at about 1649. That is the two black horizontal lines. Well, the upper quadrant, I'll go ahead and expand it up here. That way, if you're watching us on Tiger TV, it's going to be these two black horizontal lines that we are looking at. When we do see a break of that area, what we can expect is we can see a move equal to or greater than at least that level. To the upside, what that would do if there's some positive reaction to whatever it is that people are expecting out of Uncle Ben out here, that'll go ahead and complete the 1.272 butterfly sell. That would be in about the 1657 level of the ES Mini. That's the 30-minute chart out here. Likewise, if it breaks to the downside, it'll come back and it'll test the old resistance line. That became support. And it was tested yesterday as we came into that 9:30 session down at that 1632.75 level. Which way is it going to break? I don't know. Either way, we've got shorting opportunities out here in the marketplace. The market is trending down on the short-term basis. On the daily charts, hasn't made that change in trend on the intermediate time frame, which we'll call the weekly time frame, and most certainly it has not on the monthly. But so it just depends on what your horizon is, what your trading horizon is, and where you're going to make your decisions come from. And speaking of decisions, folks, I have put together a free special report. It's now available to you on the homepage of TFNN.com. It is called The Trend is Your Friend. You will see it over in the right here, if I'm going to put this up on the screen here, but if you go to the TFNN.com homepage, over on the left-hand side, kind of left center there, you'll see an up arrow and down arrow. We call it our carousel here. It says Special Report by Steve Rhodes, free special report. Over on the right-hand side, it's got a graphic. The trend is your friend until it changes. Also underneath breaking news, the trend is your friend until it changes. Go download that. You'll want to make sure that you include this in your trading arsenal, no matter what time frames, no matter what it is you trade. And if you're just beginning, this is a great place to start, a good tool to put into your tool bag out here. So market may just simply chop sideways inside this consolidation range. So whether it moves to the downside, moves back to the upside, at least you know the range, the 10-point range that we're dealing with inside the ES Mini out here. Now, let's go take a look at the indexes. Let's go see what they are doing, what they did do yesterday. If we take a look at the New York Stock Exchange, we'll start here very close to completing that 1.272 expansion of your B2C swing point. Really the area that we've been taking a look at, about 94.39. Was the sell area where we were looking for a bounce in the market. Remember, go back here to the June 9th time frame when you thought the market was just simply crushing down, or June 6th, I should say, as well as June the 13th out here. The market was just crushing down. There was no way that it was going to go up. Well, that's not true. That's what markets do. They go up and down. It's been a trader's paradise out here, and you want to make sure that you use tools just simply to understand what's going on. You may not have to trade it, but you'd like to have the tools in your arsenal. Now, all that we are looking for to sell into this market because the trend is down, because we're in the 6-month unfavorable cycle out there. Does that mean that the market has to go down? Absolutely not. Doesn't mean that it has to, but what you're always looking for is places to go ahead and pick your fights inside these markets here, whether you're bulls or bears. In this case here, the New York Stock Exchange yesterday got to a high of 94.12. 94.12 versus 94. We're going to call it, let's get the exact number out here. That way we're not using something that I drew in as an estimate. The exact number, 94.41. So it gets up to a level of 94.12 versus 94.41. Could mean another 30 points. That could be a little pop that we might see in the market. On the other hand, it's close enough for me to say the pattern is complete out there, especially when I took a look at the summation index at the oscillators last night. So it said to me that the move that we were looking for, in essence, came in yesterday or is about to come in this afternoon out there. You take out the 94.40-ish level, well, then where will the New York Stock Exchange head up to? Where will it be? Where will be the next selling opportunity? That would be 94.82. That would be your sweet 618. It would be between, I'll get it out, don't worry, between 94.82 and 95.13 out there. And that would set up your next Gartley sell pattern in the marketplace. So that's on your New York Stock Exchange, and that's something we certainly want to be paying attention to. Let's go check out the Dow. What did the Dow do? The Dow needed to get up to 15,386 in order to complete its 0.786 Gartley sell pattern. It actually got up to 15,340. So there you go, another about 40 points or so in order for it to complete its move. If we see that after the 215, 230 time frame, that would be your sell out there. If it takes that area out, and as far as taking it out, what would that mean? Good question. Let's see what the exact number is out here. Go from the May 22nd level, high down to the low from June 6th. It would probably have to be, I don't know, maybe about 15.5-ish or so, close above that. And then what that would set up, that would then set up a test of the swing point high out here. It could be the swing point for May 28th at 15.521. Maybe it's the May 22nd level of 15.542 out there. But I suspect that is not what we will see, but it doesn't really matter what I suspect. We know the patterns here have or are close to setting up their sell patterns out there. And again, the trend is your friend. And that trend, folks, on the shorter term basis, on the daily basis, is to the downside. Let's take a look at the NDX out here. This could be the bull's best friend, and the NDX 100 did not come close to completing its Gartley sell pattern yesterday. What the NDX did do and didn't do, if you take a look at the June 10th swing point, that's what it traded into. That's what it did do. What it didn't do, it didn't get above the top, which was 3,467. Instead, what it got to was 3,189 out there. So the question is it just recharging and it wants to go ahead and actually complete its pattern, which would be up at about the 3,026 level? That would be your 0.786 Gartley sell inside the inside the NDX 100 out there. So it didn't completely give us the signal yesterday. What it did do is no gap here. There was a gap in the S&P 500 on the May 28th candle, and that May 28th candle inside the S&P is held as a resistance level. Not really the case inside the NDX, as we see the close on May 30th closed inside there. So the NDX did not completely give us the information. We know we've got a hammer candle down here at the bottom on June the 6th out there, and that hammer candle has tested and has held. So no other real signals here. We'll take a look at the Qs, the SPYs, and the diamonds and so forth. I'm going to just simply stay on the indexes here at the moment. Let's go take a look at the S&P 500. Let's go see what it did do and what it didn't do. We were calling for an area of about 1659. As you recall, 1659 was the nice 1.272 expansion of our B to C swing point. It completed the A to B equals CD. In fact, it was probably just a little bit underneath that level. What did the S&P 500 do yesterday? Got to 1654. 1654 versus 1659. That is close enough for me in the government work that I'm doing here right now. Not government work, but it is close enough for me that the pattern has completed inside the S&P 500. That's what we were looking for. Could it bounce up another 5, 6, 7 points? Oh, most certainly could. But the pattern, in essence, that we were looking for is complete. Now, if we take a look at retracements here, let's go do that. Let me get rid of this line. There we go. Let's take my Fibonacci tool. If we take a look at where, in fact, could this bounce to, if, in fact, the response is super positive, you're looking at the 1673 to 1668 level. That would be inside your S&P 500. That would give you your .786 Gartley sell, and that would also be a 1.618 versus the 1.272 expansion of your B to C swing point out there. That is on the S&P 500. Let's take a look at the Russell 2000 and see what it did yesterday. The Russell 2000, in essence, completed its, just a little bit above it, but it completed its price projection. The 1.272 Gartley sell would have taken us to $9.99. What it actually closed at yesterday was $9.99.99. I just took that as like an omen that it absolutely completed its pattern out there. I mean, how many nine? You can't get better. It's almost like pure silver, like high-ho silver inside the Russell 2000 yesterday, .99999 out there. So that basically has completed its pattern. If, in fact, it decides to motor on, it will go test the highs here from May 22nd, and that high being 1008.23. But in essence, it did get a little bit above that, closed right around that area. So to me, that is enough of a test and a completion of a test inside the Russell 2000. Of course, you'll really know by getting a bearish candle today. That will confirm that the move is over inside these markets to the upside, which I suspect is what we are seeing out here. Whether that took place yesterday or it takes place this afternoon, that's what we are looking at. Now, let's go take a look at the ETF structure out here. Let's take a look at the diamonds. Let's take a look at the Qs and the SPYs and the whole bag of them out here. Let's take a look at the SPYs yesterday. Volume-wise, inside the SPY here, maybe it wasn't the S&P 500. It was the SPY that I was referring to as the candle from May 28th. There's actually a little one-point gap between that candle and May 29th. That's this little red line going across my screen. Yesterday, that level was tested. Remember, when you have a gap, they become areas of either support or resistance. In this case here, it was resistance. The volume on that session, 143 million shares yesterday, only 114, and it closed below it. Looks like we've had another test of that area today, as the high was 165.83. The low of that gap, 165.81. 877-927-6648. We'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Nice little trading range here. You know, while everybody is waited with bated breath to see how the market responds to Uncle Ben today. Actually, a nice little trading range inside the ES Mini. You know, as we were showing the consolidation level, the 1640-ish, 1641 level at the bottom, 1648. At the upside, 1649. So you've got a nice little 8-point consolidation range. You could probably ping this a few times during the day here. Right now, it looks like it's headed up towards the top of that range, which would be that 1648, 1649 level. You wouldn't have to risk very much to be trading. Your stops could be on the other side, a couple points on the other side. So maybe you got a 2-point stop on the other side of the high and low. To make a little quick 7 points out there. So that may be the best action of the day, and trade that a few times out there. Let's go out to Boston to our man Dave. Dave, thanks for calling. Thanks for holding. How are you today?
Hey, Steve. How you doing? Long time no talk. How you been?
I've been great. Thanks for asking yourself.
Hey, I can't complain. I've been last 8 months. I've been over in the Philippines. My company, we do switch removals out there, and I got 1 more month, and I should be back permanently.
Okay, well that's great. So tell us about what it is that you see around the world. That's great.
I'll tell you, Steve. Over there, it's almost like a third world country. I mean, they basically, the phone systems, the internet is just becoming a big deal, and cell service is, it's incredible. Some places have it, some places don't even know what it is.
And what are they using for cell phones? Are they, while that's coming up to speed, are they, in essence, using, the same Apple devices that we see here? Is that popular?
They're similar, but the way the signal, they share, like, data, it's almost impossible. It's almost like the old party lines back in the day.
Really?
There's certain times of day where you can't even use it. It's insane. I mean, they don't even have VoIP, nothing voice over internet yet. They're still using the old style Nortel phone systems.
Now over there, you've got a lot of islands, don't you?
Oh, it's crazy.
Yeah.
I mean, it's absolutely crazy, and the weather is insane. There's like hurricanes. Every other week over there, and the floods are just insane.
Oh my goodness! Now, how are the people treating you?
Oh, the people are great. I mean, it's really, you stay in the city, you're okay.
Yeah.
You just don't want to go too outside in the outskirts too much.
Okay.
But you pretty much, it's like Jamaica.
Okay.
Yeah,
right.
but it's crazy. I mean, but the lifestyle is insane over there.
Are you having a good time?
Man, I'll tell you.
Are you having a good time?
Quite a bit.
Yeah, are you having a good time?
Yeah, it's good. It's really good. But I one more month and we're done, and then I'll be back in Boston and
great.
trading full time. But I'm here for a few weeks anyway. At least I'm catching the Bruins in the Stanley Cup.
Okay, good. Yeah, they're looking strong. The first two games pretty amazing. Especially that triple overtime. I ended up staying up to watch that entire game because I watched the first overtime, had to watch the second, and since I was already in, so that next day was a tough day. Since I went to sleep at 1 and was up 3 hours later or what have you. But
it's amazing how many posts have been hit in this series.
Yes.
It's absolutely amazing.
Now, is
hey,
the next game tonight?
I'm thinking of shorting the SPY and using the SPXU. But you have any targets on the downside where you think this can go?
I do. I think that what seems to be setting up here is nothing more than the C point of the larger A to B equals CD down. So right. The target really on the SPY, you'd use your A point is going to be May 22nd. Your B point is going to be the low from June 6th. And your C point is either going to be the high from yesterday or maybe a intraday spike today into the 166.50 level or so. So your target really becomes 157.18. That would be your short-term target inside the SPY. That would actually set up the next pattern, the next Gartley buy pattern. That would be your 0.786 Gartley buy pattern. So, I suspect in a market where the dipsters have been rewarded, and rightfully so, that we'll continue to see this along the way as people try to feel out a bottom. I do not believe that will be the bottom when we see that A to B equals CD down complete, but we will see some moves up and down. I mean, it just will trade just like a market. So that would be my initial target.
I'm looking at the sectors, and the XLF seems a bit weak today, but the IWM, the Qs, they all seem they're holding up fairly well.
They are, and you kind of expect that. But I've seen the change. Dave, can you hold on through the break here?
Sure.
All right, we'll be back with Dave in Boston, also from the Philippines as well. 877-927-6648. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 9 points right now. S&P off a point, so flat out there. Same thing in the NASDAQ composite. Russell is down a couple of points, and we're going back out to our man Dave in Boston. And Dave is spending time in the islands in the Philippines, helping them get their telephone systems up and running. I got to ask you, Dave, the culinary aspects of being over in the islands out there. Now, they don't let any food go to waste, so that has to be. Are you trying some? You're trying some of the more popular items out there?
No, I stay away from it as much as I can. The partner I'm with, he gets me to try a lot of the seafood, and I'm not a big seafood eater.
Okay.
But a few of the things are okay, but the company pretty much puts on the spread for us, and it's all domestic stuff,
So you're not having the stomach of the pig and the knuckles and all of that.
The intestines, and they do what's it called? I forget they have a name for it.
Lechin or something like that?
Yeah, exactly. And
Yeah.
the city I'm in is Bulacan. It's
Okay.
just outside Manila. And it's really, it's a nice area, but I'll tell you, Steve, and the nightlife around those places, it's nonstop.
Oh, that's great.
If you're a young single guy, but it's a place to be, that's for sure.
Oh,
But
great.
nothing like the good old US of A. That's one thing I miss. I got one more month, and then I should be back right around the end of July.
Well, you know what? It always not that you didn't appreciate the United States, but when those wheels touch down wherever you're coming into, maybe you're coming into Kennedy or something like that, or Logan.
Green. Yeah.
What's that?
TF Green Airport.
Yeah,
That's in Providence.
Yeah, and when those wheels land down your back in the United States, you're like, oh man,
oh yeah,
feels good, doesn't it?
And then once I get going, I'm gonna sign. I tell you, I'm training now without the mastering probability. I feel naked. So as soon as I get back, I'm gonna sign back up, man. I can't.
All right.
I can't trade without it. Hey, let me ask you a question. I missed the first hour, but if you were to go short, which sector would you be shorting here? S&P or?
I like the S&P right now. I mean, you can almost toss a coin, right? The Russell. So take a look at the Russell 2000. You know, it's got some high volume downdraft days, and it may only be a matter of time before that one comes back into fashion. But I like the S&P 500. I like the mere fact that it's got a large A to B leg out there. So it's got the largest A to B leg. Maybe the Dow does as well. So either the Dow or the S&P 500. And inside the the SPYs, for example, we're trading at 165.60 right now, and the first target is 157 to 154 would be the range. I believe that the SPYs between now and when you are permanently back here, because they got another month, so between now and when we get out of the unfavorable seasonal cycle, we'll see the SPYs get down into the 147-ish level. So they get down there. I think that becomes the range where we start taking a look at maybe the next buy for the next leg up. And 147 is really not too bad because, you know, the breakout from January 2nd is at 144.73. So I suspect that that's what we will eventually see out here. You know, but as far as the sectors inside the S&P 500, I really just continue to look inside there to poke away at some of the weakness. The biggest weakness actually has been inside the biotech area. You know, so that's an area maybe to be paying attention to. I was looking at a number of stocks inside the IBB, which is one of the biotech ETFs out there. You know, to take a look at.
Oddly enough, the IYR took a beating recently too.
Yes.
I mean, that was one of the strongest sectors for the longest time, and then the commercial real estate. That IYR really sold off.
Yes, and so you could take a look at some rotation, you know, out of the sectors that had a lot of strength, people taking some money off the table, you know, just protecting those profits. So, you know, at this stage of the game, as we speak right now today on June 19th, the trend of the market is still down. H.M. Gartley always said in a bull market to sell the first Gartley pattern. If we just simply take a look at coming off of, if we just simply use this last leg here, November the 16th, this is the first Gartley sell pattern that has set up. Whether it's completed yesterday or it's going to complete this afternoon, you know, that's really what you want to do. That's where you want to put your, that's where you have your back up against the wall. Doesn't mean the trade, as you know, will work, right, but it is the first Gartley sell pattern, and with the trend being down, you know, we're in the time frame to go ahead and fire away. Whether that's right this moment or it's this afternoon at 3 o'clock, that much I can't tell you.
It's coming. I can sense it. I think you're absolutely correct. Well, listen, it's great talking to you.
Good to hear your voice.
I can't wait to get back in a month, and we'll hook up. And
absolutely.
Next time you're in Boston, we'll hook up for a pizza.
That sounds great. Sounds great. Take care. Be safe. Be safe out there.
Take care.
That was Dave from Boston. What a great radio voice he has, huh, folks? And so I think the next game in the Stanley Cup is tonight out there. So should be a great game. Even if you're not a hockey fan, you ought to watch it because you know, when you take a look at the skill set of those players out there, and I think that Chara for the Bruins was a little bit hurt, got taken out by one of his men a couple of nights ago, and Marian Hossa, he got hit with a hockey puck, I believe, and so he was not able to play. Hopefully, both those guys are back strong out there, and it'll be a great game, I'm sure. The first three have been great, so no reason that tonight's game, if it is tonight or tomorrow, that game will not be great as well. Wouldn't it be great? How about the basketball game? How about the Miami Heat yesterday? I didn't stay up for it. I just heard that they were truly on the ropes. That they even had wheeled out the trophy to give to San Antonio. And somehow I'll have to watch the Sports Center and check out the highlights. But the Miami Heat came back, tied it, and then won in overtime. So that means they go to Game 7 tomorrow in Miami. So wouldn't that be cool? Game 7. I'll take any game really to go to, but Game 7, that has to be the ultimate, especially if you are a basketball, hockey fan, whatever it might be. Anyways, we'll get back to these markets out here, and thank you. It is 8 o'clock tonight is the Bruins Chicago Blackhawks game, so be around to watch that one. In any event, Dave was talking about some of the sectors inside the S&P 500, so why don't we go poke in there and see what we see. We'll take a look at as we do usually during this show here, let's take a look at the technology sector, see what it is doing right now. That's trading up at the top of its range today, 81.84. It's been up to 81.88. It's dealing with the swing point from June 10th. That had 8 million shares. Yesterday, it rejected that area on 7.7 million shares. So far, volume here, 1.6 million shares in an hour of trading. So volume, nothing huge to speak about. If we take a look at, this is really as far as the XLK needs to move to. If we see another rejection of this price point of June 10th out there, which would be 81.68, that would be, now it's set up two. It's really actually the XLK, I take that back. It's set up three beautiful sell patterns out here. It did that when it made the top, actually, three beautiful sell patterns out here. Made a 1-to-1 A to B equals CD. That was coming off of the low from October 5th out there. So that was your A to B equals CD. Your C point on this was June 4th, and your B point was the high from February 24th. That price projection was 83.37. It actually got up to a high of 83.95. Completed that long term. Completed two 1.618 butterfly patterns as well out there. And now if we take a look at just on the smaller butterfly pattern, if we come off of the swing point low from April 17th all the way up to the high that was put in on May 22nd, you'll see that all that's been done is the 0.382 retracement. That is normal in any move. That is where you expect to see people get off of the elevator. Now all it's doing is doing its next retracement here. If we go from that high now of May 22nd to the low that was most recently put in on June 6th, what we'll see is the 0.618 level is 82.10. So 82.10, it closed back below. If it hits 82.10, it's at 81.85, and it closed back below 81.68 on less than 8 million in share, 8 million in volume. That really sets up your next A to B equals CD down. On the shorter term time frame, that A to B equals CD down would look like about this. That would take you inside the XLK down to about 77.37. What's down there? That would be the actual 618 retracement of the XLK. I suspect that is what it wants to do or what it will do out there. Let's go take a look at the financials here as soon as I can find it on my screen, all the way in the lower right. The XLF. The XLF right now trading up towards the top of its range out at 1984. It's been up to 1988 so far today. If we take a look at yesterday's action was moving into also the June 10th area. The low of that swing point was 1991. And volume up there was 65 million shares. Got up there yesterday with only 34 million shares. So Dave is right. It is losing its gas. And yesterday you had a rejection of a swing point on lighter volume out there. So far, today's volume, 7.4 million shares in the first hour of trading. I suspect we'll see volume really kind of cut back here if it hasn't already on the 10-minute charts out there. But we did have a failure at a swing point, and if we take a look at it, it is trading inside the May 22nd swing point. So that is the positive. That would be the bullish side, but that's got 95 million shares. And as I said yesterday, it traded up into that with only 34 million shares. That's on your XLF out there. Let's take a look at the energy sector, XLE. That must be right in front of me. It is right here. So we take a look at the energy sector. Let me go ahead and get rid of a couple things on here. Let's see. Okay, so if you take a look at the I was talking about the energy sector, I believe. Sorry about that. I thought it was the XLK, the first one that I did. It was actually the energy sector that I had grabbed. My apologies. Let's do the XLK now. Sorry about that. If I confused you, well, again, my apologies. So now let's take a look at the energy or the technology sector out here. So on the technology sector right now, let's take a look at the retracement off of its swing point high, which would be May 20th out here. I'll go back and do the energy sector just so we update you and give you the right data. Inside here, you're inside the 0.618 level. Looks like the XLK actually wants to maybe go tag the 3205 level. That would be the 0.786 retracement. As it made its way higher yesterday, 6.3 million shares going into the downdraft from May 22nd at 14 million shares. No way is it have really the volume to suggest that the push higher is anything more than just forming the B to C leg of an A to B equals CD down. What would that leg look like? Well, your A point you would use out here is the high from May 20th, 32.31. Your B point would be the low from June 6th, and your C point is either going to be yesterday or a high that comes in today. 1-to-1 will take you down to $30.80 out there. You're just simply going to have now with the XLK. You can see this gap here that's been tested, but that gap up is actually on light volume, 10.4 million shares, and the last time down into it was with 14 million shares on June the 6th. And that's really going to be the key, is going to be June 6th and the volume there, because if you look at the volume, we'll go back to the actual ETFs themselves, you're going to see some big volume. So that's what you would be expecting. If you see volume in excess of 14 million shares come out of the XLK, that'll set up your move down to about the 30.47, 30.80 level. And I use those levels because if we take a look at the retracement off of April 19th, all the way up to the high out here, you'll see at 30.33, that's really where it should head to. 30.33 to 30.47 would be the range for the XLK. That would be the 618 retracement. Again, the first ETF that we looked at was the energy sector. That was one that had three beautiful sell patterns out there. And again, inside that, what we're looking for is an A to B equals CD down. And that A to B equals CD down, that'll take you into about the 75 level. Now, on June the 6th, the volume there is 18 million shares. So it's going to need some giddy up and go as it moves down there. Last time down was on half the volume. That was on June the 12th, only 9.3 million shares to the downside. So that's on your energy sector out here. Let's go pick out one other sector. How about the consumer staples? Because that has been one that had been on fire. That is the XLP. So that had been the leading sector, quite frankly, inside the S&P 500. This thing most certainly had some volume come out of it, and it's going to need some big volume to take out that June 3rd swing point. That low there is 39.68, 39 million shares to the downside. All that it's doing here right now, if we take a look at its retracement level, will come all the way back to the high. In this case here was May 15th. From that high down to the low, looks like we might have double lows here. Let me see. June 3rd low we're using is 39.68. What do we have on 39.70? Yes, so 39.68 is the correct low. You'll see right now it's just really at the 0.618 level. 41.24 is that number, and it's trading right now at 41.26 out here. So the consumer staples has done its job as far as a retracement. If, in fact, this mounts an A to B equals CD down, as I suspect that all the sectors within the S&P 500, you're taking a look at 38.78. So, I'll go back and answer Dave's question this way. With regard to sectors inside the S&P 500, go take a look at the sector that has the least volume inside the June the 6th, I believe, the June 6th swing point out there, and that's the one that I would probably take. Why? Because that is going to be easy for volume to bust through it, unlike the XLP that's got 39 million shares down there. So that is a take a look at our S&P 500, at least 4 of its 9 sectors. Right now, Dow's off 13, S&P is off about 2, and we'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Relatively flat market out here. Everything slightly red. Dow's off 9 points. The S&P Composite, they're off 1. Russell 2000. The Russell 2000 is the weak link out here this morning, off 0.3%. Let's check in on the New York Stock Exchange. Actually, the Russell 2000 now has nosed out everything, off 3.5%. Of course, that has been the strong index on the way up out there. And, folks, if you haven't had a chance yet, or maybe you're not aware, I did do a special report, create a special report. It's called The Trend is Your Friend Until It Changes. And it's a set of tools that you absolutely want to make sure that I teach you inside the newsletter how to use these tools, give you some examples. It's something that you want to apply to all of your charts. Doesn't matter whether you're long-term. Doesn't matter whether you don't even use technical analysis. There's enough free charting software tools out in the marketplace. I'm going to show you how to use one, most popular, but use it in a different way to be able to identify the trend, because the trend is your friend, and that is until it changes. And I'll help you to be able to spot when you start to see those changes in trend. That's what we've seen here inside the S&P 500. We've seen it inside the New York Stock Exchange out there. So go check that out. The homepage at TFNN.com. It's under breaking news, as well as on the left-hand side of our little carousel area where you can see an up arrow and a down arrow out there, much like the markets. And as well, contained inside that special report will be a link that will allow you to test drive my software. We've never done this. My software, my newsletter service, 2 weeks. It's free of charge to go ahead and try out. Your charge card is not charged at all, so it's the easiest time. It's the best time to go check out Mastering Probability. So all those details, again, on the homepage of TFNN.com. If you want an education, go check that out. Now, let's take a look here at some of the commodities, see what's going on. We got natural gas right now. Looks like the move behind this here, so far real. Couple of nice bullish candles. Let's go see where the first bounce inside the natural gas is. A continuous contract that we are looking at has just a bit higher to go before it runs into the first level where it should find some resistance. That's at 3.99. It's been up as high as 397. So the work there could be done to the upside, and it's really going to be the next retracement on the way back, volume on the way back. That'll determine whether or not this is really now setting up an A to B equals C to up, or whether it's just simply going to go ahead and complete the pattern that'll bring it back down to the bottom of its price channel and that 0.618 Gartley buy in about the 361 level. That is on natural gas. We take a look at light sweet crude. Light sweet crude continuing, it's a breakout. Has not tested the top of the downtrend channel, but we'll see if it does test it. Yeah, and the test is going to come in somewhere, I don't know, around $95 and some change out there. Right now it's trading at $98.31. But the real cue to us, if this, and this is a weekly chart we're looking at, if in fact light sweet crude comes back to that area, holds and bounces higher, we're looking at higher prices in light sweet crude. If in fact it gets back inside that downtrend channel, it says, well, you know what, it could actually go down to the lows. The first stop, though, would be your swing point here from April 26, right around 87.55. Bonds here, let's go check in on bonds, see what they're doing. We'll pull up the continuous contract, and they're doing absolutely nothing. No budge there. So bonds are really in the oversold territory. So it looks like bonds actually want to bounce. That bounce here, the first bounce would be 142.1. Now they're at 139.1 out there. So that'd be a nice little bounce inside bonds. If we let's go check out the FTSE, see what's going on over here. The FTSE now has a nice hammer candle out here, so it's giving you a good area of support. When that gets broken, look out below. That level 62.05. That's trading off a bit this morning, but really an inside day. Folks, stay tuned. Basil Chapman will be up next. Following Basil, we got Larry Pesavento. After Larry, it's Daryl Martin, David White, and then the Tom O'Brien Show from 4 to 6. Remember, folks, the way you do anything is the way you do everything. Become a pioneer of your future versus a prisoner of your past. Have a great day, folks. I look forward to seeing you tomorrow morning. Take care now.